Well, following a Vodacom Congo shareholders meeting yesterday, the Vodacom Group announced that it will be initiating arbitration proceedings under ICC rules in Brussels. This after shareholders failed to reach agreement on a number of issues, including capital restructuring that would support the continued growth of the business. Joining us now in studio to unpack some of the detail here is Bob Collymore, Chief Officer of Corporate Affairs over at Vodacom. Thanks so much for joining us, Bob. Well, so far we know that the Vodacom Group has provided all of the funding for Vodacom Congo at commercial rates that were, of course, agreed to by the minority shareholder CWN. At this point, what exactly has Vodacom been funding?
We've pretty much funded all of the funding requirements in the company. You know, we've been there for 10 years, and I think we've invested more than $500 million in the country. It's a difficult country to find independent funding, and particularly given the capital structure in the company, it's been hard to find independent sources to provide that fund.
So at this point we hit a snag where there's been this disagreement over a number of issues, and key amongst them is capital restructuring moving forward. So what are the major issues here?
Well, the major issue here is that you have two shareholders, 51% and 49%, so it's pretty much equal. And if you don't have those two shareholders with equal ability to fund, you're going to have an imbalance. And that imbalance has been running for the past 10 years. And it can't continue, because if you're committed to growing the country, growing the business in the country, and you know, the Congo is a country where we've got less than 20% penetration, which means there's a huge potential. But building out that network in a country like the Congo, which is a very large country, will take money. And you know, it can't be as one-sided as it is at the moment.
So what resolution ultimately are you hoping for at the ICC?
Ideally, we'd like to get a solution where we can restructure the balance sheet, where you can convert a lot of those loans into equity, and where the company can then raise its own financing off its own balance sheet.
Well, looking at proceedings at the ICC, it generally takes quite a long time. It's certainly not going to be you know, a quick resolution that comes to the fore here. I mean, how long can Vodacom actually afford to wait?
For sure, it's not an open-ended thing. We're expecting this to take several months, and you know, hopefully it'll be done in less than a year. We need to keep the company ticking over, but I don't think we can continue to afford the capital investment that we've done in the past years until we've got this resolution sorted out.
Is there a possibility at all of Vodacom writing this off completely, or is the investment merit that the Congo currently holds still too valuable?
The potential in the Congo is enormous, and it'll be wrong for us to leave. You know, not only will we be losing the jobs, and we've got something like 6,000 direct and indirect jobs coming out of this, plus the whole host of distribution jobs which is created. We've got 3.5 million customers that we can't leave them sitting high and dry. And importantly, it's going to be important for the economy in the Congo, so we can't afford to leave that very easily.
So taking a look at the growth path moving forward, I mean, it is, as you say, going to take a long time. For now, what's your next step, waiting until this resolution does come to the fore? How does Vodacom operate in this territory?
Pretty much the same way it's been operating for the past few years. We think that you know, we can keep the company maintained. We can't continue to invest at the same level. The management is a pretty strong management team we've got there now, and we just need to keep them motivated and focused on turning the business around.
In terms of competition within that arena, we know that MTN has certainly been aggressive in expanding its African footprint. What kind of competition are you facing in that arena specifically?
Pretty stiff competition. You know, the competition there, we've got Zain, and Zain, as you know, has just been acquired by Bharti. We've got Tigo, who are pretty strong, and we've got Congo Chai. I mean, there's some other smaller competitors, but it's a pretty fierce market to be competing in. But you know, we tend not to be scared of fierce markets. I mean, it actually makes us tougher. And the economy itself in the Congo, you know, the Congo has faced the same problems that most of Africa has in the economic downturn. So that's meant that, you know, we need to be much more creative about how we do this. But the competition is good, and we look forward to it.